Welcome to Impact TV, a corporate venture video series in collaboration with the Kaufman Fellows. I'm Jack Crawford, a founding general partner at Impact Venture Capital, and alongside my colleague Pat Bumpus and my Kaufman Fellow co-chair Alessandro Santo, we're thrilled to welcome to the show Austin Naranja, Managing Director at Sony Innovation Fund. Austin, how are you doing today?
I'm doing well, Pat. It's been a while, Jack. It's been a while that we've been talking about. I've talked to Eric in the past, but it's good to reconnect with you.
You've had some great discussions with my co-founder Eric Ball, and so I was thrilled to get a chance to connect with you directly. I guess you also got a chance to spend a little bit of time with our team at the Global Corporate Venture Conference that they had recently. Is that an event that you attend regularly, or are there others that sort of capture your attention from a corporate venture standpoint?
Yeah, the GCV event, actually, I've been attending from day one when Jim and his team restarted it. It used to be IBF conference years ago. Jim and Christina got together and started GCV, and I've been attending it for the past 10, 12 years. It's a great event. It's a great event to network with folks, get to know what other CVCs are doing, because we pretty much are in the same role trying to connect our big motherships into smaller companies, into the startup ecosystem. So getting together with those folks on a regular basis, sometimes we meet in person. There are a few which are virtual conferences that I participate in, but it's been a good community to interact with them on a regular basis.
Well, I saw in addition to your corporate venture activities that you're former chair of the innovation board for a soccer team. I had to ask you about that. Is soccer a passion for you? Are you looking at the convergence of technology, AI, and soccer? I had to ask about that.
Yeah. So soccer, I go back. I played as a kid playing soccer in India. There we called it football. I came to Michigan. I played on a club team there, and then I moved to Silicon Valley, and I've been involved in soccer since, well, 30, 40 years. Coached my kids, have been involved. And when the earthquakes came in, I was seriously been talking to all those folks, and I helped set up the innovation board, brought in a lot of startup entrepreneurs, got together some of the VCs, and just trying to bring in some, being in Silicon Valley as San Jose earthquakes had to be doing something different than the others. And so we put this innovation board together. It's been a fun ride. We brought in a lot of startup companies that the team still uses, some of them in the analysis for the coaches to see how the players are doing, some for the media side, how do the fans interact with the players in the team. So it's been a great ride. And soccer, I'm a hardcore soccer fan, so can't wait for the next World Cup to come to the US.
Well, I'm hoping to follow your lead. Maybe I can find some technology for my favorite team, the Sacramento Kings basketball group. They're making a run, and I'm always looking for ways to give them an advantage on the court. So thanks for sharing.
Well, as long as they don't have an advantage of the Warriors, I'm good with that.
I love it. Let's talk a little bit about your background. I got a chance to visit Sony's headquarters in Tokyo. They have an innovation lab there, and I'd love to learn a little bit more about your background, your role, and Sony's focus on innovation and corporate investing. I saw amazing robotic technology. I saw incredible digital screen technology. I saw second screen technology using augmented reality. There was an iPad that they handed out, and we looked over a forest, and you could see different crops identified, and it was really interesting. But I'd love to hear you just talk a little bit about your journey over the last 28 years at Sony, your role there now, and sort of why is Sony using corporate venture investing as an access point to innovation.
So it's been less than 28, it's just 22. But what had happened is I'd been in the Valley for quite some time. I did join a Sony business group years ago. It lasted just about a year or so. The DNA of what I wanted to do. I left, started a startup company, launched the startup company, and then joined the Sony venture team back in end of 2001, beginning of 2002. So Sony has always been a technology leader, but we know that not everything can be invented inside the corporate. And so it's always been a mandate for a team to be exploring different technologies outside and looking at ways to kind of engage these startup companies along with the business units. It's a challenging task, particularly for early stage companies, because the business groups are interested in companies with a little bit more scale before they engage with them. So we had been putting in investments in various forms, some of them coming from the business unit's point of view, sometimes coming in from the headquarters point of view, looking at the broader picture, what Sony may be interested in. But in 2016, we relaunched or rebranded Sony investment activities. We call it Sony Innovation Fund. One of the things that was missing out earlier, our first stance when we had got into the investment, was working with very early stage companies. The reason for that is it was very difficult to kind of take a very early stage company and take it into the Sony business unit, which is very focused on, 1 year, 2 years from now, to be able to do it. So the Sony Innovation Fund was a $100 million fund. It is off the balance sheet. And what we're looking for is adjacent and new areas for Sony to begin getting in. So given that mandate, we do not have to engage with the BUs when we signed the agreement to invest in the company. So we have made about 110 investments in this early stage fund. Its check sizes anywhere from $250K to $2 million, $3 million. No commercial agreements required. We invest in the company, but stay and engage with the company. So it is from the time when we were investing in the early 2000s, late 2000s, coming into investing in companies which are relevant to today's business, engaged with the BUs. We kind of pivoted a little bit and started this early stage investment fund. Fast forward 3 years after the 2016 launch of the $100 million fund, we launched a fund which is actually a little bit unique in the CVC, where we are the GPs and we have external LPs. We have LPs from all the big banks in Japan, some of the universities and other institutes in there. It was a $160 million fund, and we call it Innovation Growth Fund. The mandate of that particular fund was looking again at the same areas, adjacent in new areas, strategic to Sony, but putting on more of a financial mindset on it. So the fund is very, very financially driven. We call it financially driven, but strategic relevance to be able to do it. We have done about 35 investments out of that fund. 4 years later, in 2023, we just closed the fund. It is a $220 million fund. The same team. Sony is the GP, and we have external LPs. And this time we have a few even corporates involved in the fund. Yeah, so overall, it's a good mix of strategic relevance and financially driven fund. That's how the team operates.
Quite a unique structure with regard to outside LPs. I mean, most corporate venture groups have a single LP, so that's quite a graduation, if you will, or an evolution of the corporate venture model. As corporate venture groups play a role in, 30, 40, 50% of all venture-backed deals. It's kind of interesting to see you with a variety of LPs in addition to Sony for that fund.
It definitely is. It kind of provides a different perspective to the team itself. The same team manages both funds. Later on, I can get you of how we structure it, how we process the deals coming through and stuff like that. But it's an interesting mix.
Let's talk a little bit about industry sector. So I grew up taking my Walkman everywhere I went, riding my bike or snow skiing, or it went everywhere with me. A family full of houses full of Sony TVs over the years, and now more recently sort of Sony headphones. I mean, most people know Sony as sort of consumer electronics, sort of the entertainment industry. Of course, when I went for the tour of Sony, I got the chance to see some incredible TV cameras and robotic pets and some views into the future. Can you tell us a little bit about your investment mandate as it relates and broadens beyond just consumer electronics and entertainment?
So let me give you an update on the Sony Group itself. So Sony Group comprises of multiple companies, separate companies. A lot of folks just know Sony as the TVs, the electronic side, and the entertainment side. But Sony is way beyond that. Many people, at least in the US, don't know we have nearly more than a $10 billion financial services business. So Sony has a Sony Bank, which is a neobank, started way back in the early 2000s. We have insurance, assurance, elderly care, nursing home activities that are there in Japan. It's primarily in Japan. Sony is one of the top 3 or 4 ISPs in Japan. The other area Sony is very much into it and has been growing significantly is in the healthcare business. On the healthcare side, Sony is both in the diagnostic side of it. They did a joint venture with Olympus for the imaging side of it. So overall, our interests are just not the entertainment and consumer electronic sides, but it's pretty broad. Fintech, healthcare. So that's kind of drives into those adjacent and new areas I was talking about. These current businesses that are in Sony in the healthcare, fintech side, those are the areas we are beginning to look at expanding. And of course, there are some new areas in robotics. One last area I would again bring up is mobility. Mobility is, again, we looked at mobility across the stack, going from sensors on to applications, to autonomous driving, up to ride car sharing platforms to be able to do it. And we have made some bets in each of those spaces. A few years ago, Sony had announced a concept car. And last year, we publicly announced a joint venture with Honda. It's called Sony Honda Mobility. And the plan is to introduce a car at the end of 2025, beginning of 2026. So pulling all those new initiatives at Sony, whether it's in that area, whether it's in drone technology, we have a whole business surrounding drone technology. So we're looking at the entire stack, just not for the hardware components, which we are pretty good at, but everything else that goes beyond that on the services side of the drone industry. The same thing with robotics. We are not looking at hardware, robots, or actuators and stuff like that. We're looking at more, how can these robots be used in the service industry, in the warehouses and stuff like that. And as we go through the portfolio, you'll see snippets of all these strategies being rolled into how our investment thesis is rolled out.
Is artificial intelligence a big part of the strategy? I mean, we're oftentimes looking at AI applied to security or to healthcare or to consumer electronics and some of the other areas robotics, some of the other areas that you're looking at. How are you thinking about artificial intelligence these days as it relates to the sectors that you mentioned?
AI is across the board. So yes, like we just don't say AI. I think we use AI as being applied into all these verticals, whether we're using AI for looking at images. So an example is we invest in a company called Echo Imaging, which is a handheld portable ultrasound device. That's just the device, but the whole application, the workflow that goes with it, we are using AI to understand those images and help the doctor. Ultimately, AI is not replacing the physician, but is basically aiding the physician in making certain decisions for doing it. So that's an example of AI being used in healthcare. We have looked at various AIs being used in robotics across the board. We invest in a company called Agility Robotics, which is again one of those bipedal robots, which is very much attuned to being used in the warehouses and again assisting humans. And there too, if we apply AI, it can be doing many of those tasks autonomously instead of a human being involved and programming it for every possible task.
Yeah, we too are fascinated by how AI applies to a variety of areas, including robotics. One of our companies, Advanced Farm, actually uses AI with its robotics in the agriculture space, picking strawberries and apples, really looking at the visual technology, understand the size, shape, and color of the right timing for picking fruit. It's pretty interesting. I think some of those technologies might actually be applicable in places like Japan, where a workforce that's growing a little bit older and an agriculture market that's thriving. So I'll have to follow up with you separately with regard to Advanced Farm. Can you talk a little bit about your stage focus, just a little bit more on how you define early stage? I mean, we're looking at as a seed stage investor, we're looking oftentimes at a prototype or the beginnings of a completed product, and oftentimes no revenues or maybe the very beginnings of revenues. How do you define early stage as we look for opportunities that would be relevant to Sony? Can you describe what we should be looking for by company stage?
So just as a fund operation wise, because we have these multiple funds, I can probably say we look at writing checks anywhere from $250K to $10 million. The early stage is kind of difficult to define because the way we look at it is the way we operate these funds is Anything less than a certain threshold, because the same team is running both funds, anything less than a certain threshold goes into the early stage fund, which is the Sony Innovation Fund. Anything more than a threshold, I could say anywhere between $35 to $40 million pre-money valuation goes into the other funds. Now, sometimes you'll come across a seed fund, a seed stage company. We were looking at a Gen AI seed stage company, which valuation was much, much more than 40 to 50. So automatically jumps into the next fund to be able to do it. So for us is when we're looking at early stage companies, we definitely like to look at the team. We like to look at some kind of preliminary product market fit. That would be something interesting to do. If it's a hardcore technology company, yes, what is the technology background of the founders? Have they filed any IP, or at least looking at filing some IP? What's the uniqueness on the technology side? So based on the focus areas, particularly in the software, there's not much IP that we can talk about. But at least if it's a deep tech tech company, early stage, we're looking at some kind of basic IP that the company would have been looking at differentiate itself from. So the early stage, again, we are pretty flexible in the kind of checks we write. We have done safe notes, KISS notes. We have done convertible notes. We have done price rounds. The one thing that we don't do is we don't lead. So we're always looking for, potential partners like you that can be leading the round, and we come in as a potential partner, as a syndicate.
That's helpful. Austin, you mentioned earlier that you operate fairly autonomously, but you still do collaborate with the business units within Sony. So I'm assuming no business unit sponsorship required, but you do kind of collaborate with them informally on technical due diligence or maybe adding value post investment.
Definitely. So we do not need the okay from the BUs to make an investment. Obviously, we are pretty close to the BUs, so we are aware of their strategies moving forward and stuff like that. So we always try to tie those into the investment thesis that we have. But as I mentioned, there's no commercial agreements required because that could take a substantial amount of time. So we move forward with the investment with the intention, having Sony having such a broad international ecosystem that Sony has, intention to partner with the business units, partner with the technical resources internally and some externally, and getting some industry insights before we make that investment. After the investment, we do our best to try to get these startup companies ready to collaborate with the BUs. And that is one of our mandates that we look at, and a goal to go forward and make these partnership agreements with the business units and the startup companies.
Got it. At Impact Venture Capital, we're regularly looking to collaborate with the corporate venture and business units. And I'm curious about how you're collaborating with VCs that are operating maybe by stage slightly earlier than where you're focused. We're seed stage VC that has made 33 investments with check size of 500,000 to $1 million. Those investments have now been followed by $500 million of capital from the corporate venture community, including Intel and Zoom and Yamaha and SoftBank and Qualcomm and Applied Materials and a bunch of others. And so, Austin, we've got to figure out a co-investment opportunity with Sony. So maybe this will help us to identify sort of areas of interest. But how are you collaborating with the impact venture capitals of the world, with the seed stage VC firms like us that are highly enthusiastic about collaborating with corporates? Is it just deal flow sourcing? Is there other market insight that you're sharing? Any other ways in which you're collaborating that are a bit unique?
All the above, actually. So our network, having been in the Valley for such a long time, and my team has also been in the Valley. We have some folks in LA, which is focused on the media side and the entertainment side, and they've got an amazing network there. What we tend to do is to collaborate with funds like yours at the early stage, collaborate with even the larger funds, with the Sanderson or NEA and others, and work with them on particularly for defining the investment thesis. we obviously collaborate with a lot of the other CVCs too. And there is no competition among our CVCs. We collaborate, we've done co-investments with Samsung, we've done investments with Intel, all the above, the big and the large and the small. M12 is another one. We have made at least 3 investments alongside them. So we're always looking for that collaboration part of it. And we look for partners who are well set up in the industry to lead the round. And then we come in and participate in that particular round to be able to do it. So both for the insight side and the deal flow is very, very important to us. Having said that, that's for the investment side. But then there are a lot of the other VCs that may have an interest of their Series C, Series D company that has an interest to work with the Sony business units. Even though our fund may not write a check into that particular company, but we are very happy to introduce these companies, take it to the right person within the Sony business units. So in that way too, some of the VCs are very happy to collaborate with us to help their portfolios collaborate with some of our business units.
Can you talk a little bit about how you source deals in addition to working with seed stage VC firms who can provide industry relevant and stage relevant deal flow? I mean, you've got, technologies that range from, entertainment to fintech. You mentioned healthcare, IoT, mobility, a deep tech sensor technology. I mean, that's a variety of different technologies. How are you sourcing, interesting seed and early stage opportunities?
It's a combination. So I call it the proactive and the reactive way. Sometimes one startup may come to us. We're looking at let's say we're just looking at the mobility space. When we look at the whole landscape and then we see which are the areas that we find it more relevant to us and which are the areas that there's a growth potential. The market is a growing market for be able to do it. So when we are in the proactive stage, that's the time we reach out to 10 companies, 20 companies, looking at all the databases out there. And then we be able to look at those companies, and we have folks on the analysts to sit down and look at all these different companies and see which would be the best company to go investment. On the reactive side is, companies like you or others from the seed side or in Series B, Series D, through a network, they approach us. Hey, this company could be relevant to your thesis. This company could be relevant to Sony. And that's the time we start looking at it. So it's at times when we have a very fixed thesis, which we do have, at least in 6 or 7 different areas, we are proactively going and sourcing companies, whether they're coming in from accelerators, incubators, and early stage companies like yours, and then also reacting to some of the inflow that comes in from some of the entrepreneurs we have worked in for the past 1 decade, 2 decades. They tend to come back to us and we interact with those folks.
Yep, that's really helpful.
And sometimes there are some leads that come in from our BUs actually, because the companies approach the BU and the BU sends it across to us. Hey, this could be an interesting company for you guys to look at.
Yeah, makes a lot of sense. Let's talk a little bit about strategic versus sort of investment returns versus sort of the impact and mission driven aspects of some of what you do. How are you balancing as you make investments and get access to innovation? In some cases, the tension between strategic value for Sony, investment returns to generate investment performance to show that you're performing well, and sort of some of the mission-driven aspects of what is clearly important to Sony from a corporate charter standpoint.
So given the structure that we have and how we set ourselves up, it is financially driven first. We call it financially driven strategic relevance about these startup companies. So if the company is the right company that we have invested in it and it does a deal with the business unit, we want to make sure it's a company that's going to survive and grow. So if we just don't do it because a business unit is engaged with them, that's not the reason to invest for pure strategic reasons. So given the fact that we are doing this financial returns as a mandate, as a priority, we tend to pick up companies that are not to, we are hoping that are going to go and get us the right financial returns. And if the strategic partnership happens with the BUs, that's all the more better. So the financial first, strategic relevance is secondary.
And then with regard to the mission-driven activities, it seems like there's been an evolution in the corporate venture world from strategically responsible investments. Hey, we're not going to invest in these types of businesses. An evolution to ESG, environmental social governance aspects, and then some who have said, hey, that doesn't include healthcare in the way that we'd like it to, or education in the way that we'd like it to. So we're going to sort of evolve and adopt the UN's framework for sustainable development goals. And that seems to be sort of broadly adopted. I'm even seeing some corporate venture groups start to color code their portfolio in line with the UN's sustainable development goals. And I think the numbers are astronomical with regard to the amount of investment that's going to come from the Fortune 500 into the UN's SDGs. How do you think about sort of ESG versus these SDGs and sort of the mission-driven aspect of what Sony's trying to do to make the world a better place?
So Sony's, the current CEO is also, we are driven with the road to zero. So Sony's already made commitments to do quite a few things. And in fact, in 2020 or 2020, we launched a small fund that's called Sony Innovation Fund Environment, SIF-E, we call it. It is purely focused on very much technologies related to the climate and the environment to be able to write. We're writing small checks in this space. So back to the SDG side, we're not looking at the overall broader SDG, from the UN category, but you're focused a lot more on the environment side of it and the climate side of it and the sustainability side of it. So keeping that in mind, and this fund that we had launched, we are looking at investments in this space, but then also the investments that we look at, and we make investments which are not directly affecting directly in the environment and the sustainability space. We do a ESG scoring on those. But for the environment investments where we made direct investments, example is a company close here in Santa Cruz called Cruise Foam. They come up with a material that is going to be a replacement for styrofoam. So in a way, there's so much packaging that goes into Sony products and other products that are going there in all the Amazon packaging, everything else comes in. We think this could be a great solution for that. The company is early stage, but that was one of our first bets we made out of the fund here, right in the Bay Area. So a combination of directed investments in that whole environment and sustainability space, and then of course some of the ESG related scoring that we do when we make investment, just to keep track of some of our portfolio companies, how they're doing in that particular space.
And to be clear, that scoring is typically done post-investment. It's not necessarily part of your due diligence process on the front end, or is it?
It is at a high level, the due diligence process. Obviously, if there is something that we very directly see it's going to be causing major havoc in the environment, we will shy away from it. But it's a combination of doing it while we make that investment, and then maintaining and checking on that on a regular basis, on an annual basis.
Let's shift gears and talk a little bit about something that might be helpful for the founders that watch this. Startup founders are oftentimes trying to connect and be relevant to not only the venture capital community, but the corporate venture capital community. From Sony's perspective and your long history and experience in this area, are there certain character traits, certain things that you look for in management teams of the early stage companies that you invest in?
I think we've done investments in some first-time founders too, and it's been pleasantly surprised, and some that disappointed. But obviously, if there is a founder that has got history, that would be very good, of a successful or been in the industry before as a startup entrepreneur, that would be good. Coming up with some technologies, having their facts together before they come to meet the corporate, because the corporate folks, whether it's our team or just even if we have some folks from the business units attend the call, they're pretty knowledgeable. So I think getting in versus potentially some just pure financial VCs may not get into the depth of the technology that you're talking about. So being prepared with the right technology thesis that they're coming up with, and then to some extent the knowledge of the market itself. If it is an area that they're coming in and they're talking about gaming, they're talking about entertainment, they're talking about digital cameras, you're doing a codec chip for audio. Actually, one or two of your companies for audio related companies. If we take it back to a BUs, these guys are darn experts in all this stuff because they've been doing it. So one suggestion I would give to entrepreneurs when you're pitching to the corporates, whether it's through the CVC fund or directly, just come prepared with the right kind of information that you know that kind of backs up whatever claims that they have. So they have data that backs up the projections they're talking about, the technology that they're talking about. There should be real actual data that kind of backs it up.
Yeah, that's really helpful advice. I think the other thing I'm curious about is some of these entrepreneurs actually secure an amazing amount of attention from the venture capital community and the corporate venture community when they've got a highly relevant technology with product market fit, and it looks like it's going to be an oversubscribed round. In those areas where you're trying to showcase the value beyond capital at Sony, it'd be interesting for you to comment there. Our experience in interacting with now hundreds of corporate venture groups is that some are actually quite good at showing how they can support the company with market insight. Some are providing co-development resources. Some are clearly, locking down commercial agreements and becoming a customer. Some are partners. Some are, a channel to sell to other customers. Clearly, corporates are showcasing themselves more than ever now as a capital source, as an investor. How does Sony sort of position itself from the standpoint of value beyond capital when you make investments?
So, we all realize that partnerships and collaborations is key for a lot of these companies as they go into this rapidly evolving business landscape. So our goal is like using Sony's global extensive network that we have of resources, technical resources, industry insights, is we try to help these startup companies, scale to some extent for the other. The second thing is one of the uniqueness, or I shouldn't say the uniqueness of some of our fund, the Sony Innovation Fund, is we have feet on the ground in 5 regions. We are in Europe, we are in Israel, Japan, US, and also India. So particularly in these areas where these teams are well connected into the Sony business units, they're well connected into the Sony ecosystem in those particular regions. We are more than happy to help our portfolio companies kind of help navigate those channels. But there's the cultural differences, a Japanese company trying to establish itself in the US, we have a lot of advice to offer them, networks that we can, not only within Sony, but outside Sony, that can help them scale. So adding those resources and that kind of support is kind of what helps differentiates a CVC from just a plain, corporate or a plain VC group that is trying to put money into the company.
I think it's clear to see the industry insights, the geographic presence, the commercial agreements with Sony. I mean, there's a lot of value that you can help, as an early stage company is trying to figure out a way to sort of scale and create a leadership position in the marketplace. Let's finish by talking a little bit about tech trends, and then I want to go into the rapid fire portion of the program just to totally wrap up. But just with regard to tech trends, we're doing some industry white papers now on generative AI and the wide market landscape there. We're looking at the enterprise metaverse. We're looking at any way in which AI applies to security, finance, digital health, and other market sectors. As you look ahead, out through the telescope over the next sort of 5 years, is there any subsector that's really got your attention? We're looking at generative AI and saying, well, wait a minute, there was, we don't really talk about sort of the internet as a subsector, as a sector anymore, because it applies everywhere. AI and generative AI appear to apply in every market. What sector, technology trend are you thinking about now that has kind of captured your interest and attention as we look out a couple of years?
So we are looking at, the broader side that I mentioned, the 5 categories that we're looking at is we're looking at health tech, we're looking at fintech, we're looking at deep tech, which is kind of, again, one of those AI things that spreads across various different areas for doing it. We're looking at the entertainment technology side of it. On the entertainment side, we are looking at what could be the next experiences that can be created, because it's all about entertainment and the media side of it. Sony has Sony Music, Sony Pictures, and then of course the gaming platform for doing it. But even there, it's all about the creators' experiences. And then for the creators, how can the fandom kind of be created, the whole fan base be engaged beyond just the physical presence of that particular creator or the artist to be able to do it. So there are a lot of technologies that are helping in there, whether AR comes in between, whether AI is used for some of the stuff to be able to do it, both on the technology side. On the healthcare side, one of the areas that is interesting to us is, and we have made 2 or 3 bets, and we are hoping for great results, is the whole digital therapeutic side, because there's a lot of billions and billions going on the pharma side of it, but there's also a lot of research and good progress being made using digital technology for creating, for solving certain problems, issues. So we invested in a company called Lunopia, which is basically using a VR headset for solving the whole issues related to the common term is called lazy eye. So the kids are pretty interested in using such technology. They'll be motivated to use it, but it's just using your standard, kids movies that they put up with the right technology, switching in the digital realm, which helps to solve that problem for be able to do it. So I think there'll be more and more such solutions coming. They still have to go through the FDA clearance and everything else, but to be able to solving these problems, which have less of a stigma, less of a side effects of what potentially a drug would have. So digital therapeutics in this. On the fintech side, we're looking at a lot of the whole the fraud detection areas, authentication. We invested in a company called Arcos Labs, which is basically authentication into platforms, and the PlayStation is using it. We co-invested it along with M12, and so is the Xbox using it. So a lot of these areas. But as we get into AI, I think the bigger issues would be the whole AI, the security side of it, and the governance side of it. Mm-hmm. So those are some of the things we'll have to keep in mind as we start looking at this wide area of AI being used for, whether it's in the fintech side or the healthcare side. This everything was going to be having to see what the security issues could be for there, what the governance issues would be there for AI to be adopted in the enterprise space.
Certainly a fascinating area applying to a huge number of markets, and I agree that some of the regulatory aspects will be interesting, and security is just a huge, our most significant portfolio company is actually focused on an AI chip. It's an AI chip company focused on cybersecurity, so it's an area we're paying close attention to. I think you're right on. Okay, the rapid fire portion of the Q&A.
Oh, wow.
Aspect of this, Austin. Just a couple questions. There's actually quite a number of Coffin Fellows that will not only see this live, but will also watch back the recorded version. You've been operating as a high-performing corporate investor for 22 years. Is there any one, two, three things that you would point to as sort of keys to success for professional excellence, given how long and how well you've been doing this?
I think for me personally, at the age that I'm too, is I have to continue to be always curious and be open to learning new things. It's amazing how an 18-year-old kid can come in and teach me something which I've not heard of, but he just had a different mindset that kind of teach me. So I as a person, if I stop learning or I stop saying I know it all kind of stuff, that would be a big barrier for my success. And I've always been open. And the same thing, it's been amazing how much I learned just talking to all the Sony business units internally to be able to do it. So I think having that openness to learn something from someone who's, across the table, even though they are the people who are pitching, they're the people who want your money, that openness has to be there. So whether you say, don't have that ego, but go listen to what they have to say to be able to do it. So that would be one. The second one would be is once you learn that, I think it's good to go into the depth of whatever field you're looking at. And just the superficial side of it, of venture stuff is just fine. You go with whatever the trend is happening. But if you really want to be successful, I think you need to pick a few topics and go deep into them to be able to do it. So those things, the curiosity, the openness to learning from anyone, actually, whether it be a school kid or a well-respected VC. And the second one is, get into the depth of anything that you're looking at. A little bit more depth would always help.
Industry specialization, that's interesting. Yeah, I also agree with you about sort of learning from the next generation, because we've had, 4 to 6 interns, during summer times, and it's just like their perspective and their insight is always instructional. And so I think I'm mentoring them, but many times they're mentoring me on how digital natives use technology and sort of, new and interesting technology trends. Last
Man,
question.
Gen Z and the millennials, totally different mindset. It's amazing. And so luckily I have access to it. My kids are in that space. And so, anything that comes in, because the way they use, the way they interact with things and the way react to things is amazing. So it's always good to bounce it off those folks.
Last question for you. A bit of a personal question, if you don't mind. This life is a bit of a marathon made up of a series of sprints, and I'm convinced that sort of how you start each day, if there's a focus, a routine around how you sort of launch your day, you're sort of optimized for taking on that day and maybe learning something, or maybe creating something, maybe generating some value and results. Out of curiosity, how do you start? Do you have any personal morning routines or something that you do that sort of kickstarts your day in a positive way?
So, ideally, people do say you should go into bed at this time and, have so much of sleep and all that stuff. Unfortunately, the way we do operate as a global team. And so to have Europe, US, and India and Japan together, sometimes either the very late night calls for me or early morning calls for me. And so it's not really regular when I go in for doing it, but I do 2 or 3 things in the morning on a regular basis, whether I wake up at 6 or 7 or 8. One is I do need that cup of coffee in the morning, which I do have. I don't check emails, but I do check some messages, because that's the text messages that I do check, some of those ones there. And then I have a dog, and the dog is good and bad, because it pesters me as soon as it wakes up to have food and then go for a walk. So I'm forced to go for a walk, which is good. I've developed that habit. A cup of coffee, feed the dog, go for 20 to 30-minute brisk walk. I used to run a lot, but because of my soccer playing days, my ankles are pretty bad. So I just walk, but a brisk walk, very brisk walk along the coastal trail. I happen to be lived close by. And then actually a 5-minute cold shower. And I know that is, some people don't like it, but I've started doing that for a few years. I do turn it on a hot water, and then the last 3 minutes is a cold shower. And so that's my routine: the coffee, the brisk walk, and the cold shower. And that just opens up my mind. And that's the time I get into emails after that.
Oh, thanks so much for sharing that. I don't know if I can do the cold shower, but I maybe
Give it a try. Give it a try. It's amazing. Actually, there are a lot of folks who are getting into it, but I just started a few years ago, and I just love it. The last 2-3 minutes, that's it. The first 2-3 minutes is warm. Yeah.
I may soon be buying a robotic pet from Sony, though, for walks around the block. That may be a great way to start my day. Hey, Austin, on behalf of the team here at Impact Venture Capital and the Kaufman Fellows Group, thanks again for spending time with us. I really appreciate it.